Hey guys, welcome back to the Crypto Corner. Want to pop in today and do another episode and talk about Bitcoin and the total crypto market, which follows Bitcoin very, very closely. So with that being said, if you guys like these videos, sit back, relax, put on your earbuds, whatever the case may be, and enjoy the next 15 to 20 minutes. And if you guys like these videos, can you just do me a favor, just real quick, right below this video, there's a red subscribe button. If you can click that button to make sure that you're subscribed to this channel, and then right next to that video, that subscribe button, there's a little bell icon. Click that little bell icon to make sure it's activated. And what that's going to do, that's going to make sure that you get these videos as soon as they're made, and you'll get a notification that there's a new video released. So if you guys can take a few seconds and just click those two buttons for me, and also right to the left of that, there's going to be a thumbs up icon. If you can click that little thumbs up icon, and that helps support the channel and allows me to make these videos. So if you can take a few seconds, if you guys would be so kind, I'm going to set myself another goal here. I'd like to get 10 thumbs up on these videos. So if you guys can take a few seconds, do that for me, and we'll start our goals really low at 10 likes, and then we'll move up from there. So let's get into today's technical analysis. And of course, you know how we do these videos. We got to go through the silliness first. Disclaimer, no part of this content is financial advice. I am not a financial advisor, nor will I ever advise you what to do with your trades. This is for entertainment purposes only. Please take what you hear on this video as my personal opinion, and use what you hear on this video as well as any outside source to form your own opinion. This market is very risky, so please trade wisely. Now, with that being said, let's get into today's technical analysis. If you guys watched the past few days videos, we talked about this wedge that was forming back. You know, we had this craziness candle, this $1,000 candle that came in on the 1st of April, and we began forming this pattern here. And let me get my drawing tool out here so it makes things easier. We had this this wedge that began forming back in the 1st of April, and we started getting higher and higher and higher. And we got to the point on this I can't even think today, right? This pattern here that would either confirm it as a rising wedge or a ascending triangle, which a lot of technical analysis, some people thought that this was going to be a ascending triangle. Okay. Which this is before these candles here came out. So if you can just not look at from here forward. So when we were in up to about like right here, everybody was calling this an ascending triangle, which typically is a bullish pattern, which typically will mean when it gets to this area here and it breaks above this level here, that's when you go long, because this is a bullish type pattern. Okay. Now here's what's very interesting about this, and is kind of raising some eyebrows in this space just a little bit. So the technical trading pattern for a pattern like this is when you see a confirmation. You hear about people say, wait for confirmations, right? Wait for confirmations. So a technical confirmation is when we break this structure, right? As soon as we break above this double top here, that's when a lot of people would say, oh crap, okay, it's going. It broke this structure here. Now it's time to go long. Well, if you look and see what happened, we had a lot of volume that came in. And that, by the way, this is on the 10th. This is 2 days ago. It broke this structure, and then look what happened. The market makers said, not so fast. Boom, brought it right back down. Okay, so it's very obvious that the market makers understand what people are going to be waiting for, and the algorithm bots that are trading this market, they know what to look for, and if they see a break of this line here, they they're waiting for this structure to break, so they know then the market makers and the boys, I'm using air quotes if you cannot see that, the boys realize that, and they say, okay, dump it. And that's when they sell, and that's when we got this dump to the downside. So a lot of people are seeing that and are clearly saying, okay, the market makers clearly have control of this market. And a lot of people, it's a manipulated market. It's a, you know what, guys? I hate to break this to you. Market manipulation is in every single asset, every single market. Has been for years, always has been in, and always will be. Okay, so if you try to blame all the unfavorable moves on market manipulation, then you're just going to be boo-hooing for eternity, because it's never going to change. Someone once told me when I first started getting into trading, they said, don't ever try to beat the boys. You'll never win that. Try to follow the boys. Try to find out what they're doing. Try to watch what they're doing and try to follow and do what they're doing, because they make money in this market. Don't ever try to beat them. And that sounds kind of, I don't even know what the right word is for it, but it's one of those things you're not gonna, unless you happen to have millions and millions and millions of dollars where you can be your own market maker. Okay, then, but most of us are not in that position. So just try to understand what they're doing, try to follow along with what they're doing, and somewhat ride their coattails, so to speak. Okay, so we had a break below this structure here, which we were calling, on our end, we were calling for a rising wedge pattern, which is a bearish structure, right? And we broke through it. Now, luckily, we were on the right side of that call, and we did break lower. Now, we talked about yesterday is these 3 boxes here, which are potential targets for long positions. You can see yesterday, we came down and we touched on this level right here. You can see where that red wick came down right on the side of our green box there. Came down right exactly to that level. Okay, I mean, almost exactly right to it, probably close to the dollar, honestly. And what that basically is, that's just the bottom of this pattern here. We use it as support here, resistance here, and this would be an area if you happen to went long here. Full disclosure, I did not yet. But if you happen to gone long here, then you would have been in profit just a little bit here. Let's see, you would have been up. As of right now, you'd be up about 3 or 4%. So not too bad for just a day's worth of buying. So anyway, so that would be target number 1 if you were to go long. Target number 2 is this lower middle range right here, which is like the $4,700 mark. And where I'm getting that level from is right here. When we first came up, we kind of consolidated out for about a day, maybe 2. And found some support and resistance in this area. You can see we tested this level here, we tested this level here, and this would be an area of a potential bounce. Another area below that one is this box right here, which is around the $4,600 mark. And where I'm getting that mark, let's switch over to the day and we can kind of see where we're at here. On our way down from $6,000 back in November, you can see when we dropped here, this was the area that we kind of consolidated out just a little bit for like maybe a day and a half or so. These are the top of those wicks. Okay, so I could definitely see that being an area of possible, it would respect that area just a little bit. So, and then below that, of course, we get down to our top of our green box, which we talked about these 3 boxes that the green, the yellow, and the red. And if you guys have not seen those videos, I think it's like 3 or 4 videos ago, we talked about these 3 areas of zones for Bitcoin that we will probably be traveling within for the next several months. So anyway, if you have not seen those, I will try to remember to link that video in the end screen of this video. So if you have not watched those, we'll put that up there for you guys to watch. So keep a very close eye on those three short-term areas, and we could get a bounce and maybe possibly retest this $5,300 range or possibly even the 55. So something to keep a very close eye on. Now I want to switch gears just a little bit in this video, and typically on these videos I like to talk about kind of the short to medium term technical analysis reads on this market, but I want to shift gears into something a little bit different. And full disclosure, the way that I personally trade this market is I have basically two different bags, you could say. Okay, well, I have one bag that is basically long-term. I am putting back, it's in cold storage, and it's off the exchanges, off the markets, etc. And then I have another bag that I kind of, I don't want to say play with, but that's my play money, right? That's my trade money. That's where I, Binance or GDAX, that's kind of dating me a little bit, but Coinbase Pro or other exchanges where I, trade, daily, weekly, swing trades, whatever the case may be. So I want to switch gears to someone. We talked about the lazy river approach yesterday. And if you guys did not watch that video, if you want to watch yesterday's video, we talked about one style of trading that, a lot of people that don't understand or are just starting to understand what trading is, and it could be a little overwhelming and a little confusing, seeing all these weird looking lines and these, all these different indicators on charts. It might be a little overwhelming for people that don't understand some of this stuff. So one approach to trading, one style of trading, is what I call the lazy river approach. Everybody's been to a water park, and you guys know what the lazy river is. It's that continuous flow of water that flows around the park, and you just grab yourself an inner tube and you hop on the inner tube, and it kind of floats you around the whole park, and it's just called the lazy river, right? So it's just, you go with the flow, hop on there, and just relax and just let the current take you where it's going to take, okay? So we're going to talk about that approach a little bit in this video, and hopefully it'll make sense to you guys, and I'd like to get your guys' take on what we're going to talk about. Now, probably everybody has heard about the death cross and a golden cross, okay? If you guys have not heard of this before, we had a death cross, and basically here's what a death cross is. Let's scroll out, and we are currently looking, I tell you what, let's go over to the BLX. The BLX chart, if you guys are not familiar with, the BLX chart is basically the Bitcoin chart that is a culmination of a lot of different exchanges charts and data compiled into one chart. Okay, so because some people may have noticed, like, the Coinbase chart may look different than the Bitstamp chart. It may look different than, this chart or that chart, but it's all Bitcoin, but it's just different exchanges, right? So BLX just kind of combines all of that data into one chart. So it's just kind of a good means of a middle ground for all the different exchanges. So now, on topic, what we're talking about is a death cross. So you guys can see this green line here, and you guys see this red line here. What this is, and we are on the daily time frame, okay? You can use this in lower time frames, but it's not a good indicator for what we're going to be talking about. This is the day time frame. So if you guys want to replicate this on your chart, you guys can do this. Now, the green line, what that is your 50 moving average, okay? And you can set this up in your indicators. You can just go to indicators and type in MA, and then that moving average, that's what you want to do. And let me show you how to do this. Actually, I'll just set it up for you right now so you can see how we do it from the very beginning. So indicators, MA, I actually have a template set up to where I can just click on one button. But say you do the moving average, it pops up one over here, and you'll need two of them. So you just click it again. And then what you want to do is you want to click this gear icon, and it'll pop this up. Now inputs, you want to put 50, 50. And then style, you can change this to whatever color you want it to be. Let's make this green. Okay? And then click OK. And then the second MA where it says 9, you want to click that and you want to make that 200. So 200 there, and you can make that red or whatever color you like. Okay? And actually I like to make my lines just a little bit fatter so it's easier to read. And let's do that with our green line. And let's see here. Got it. And fatten that line up just a little bit. Okay, so now we have our two lines. We have our 50 and our 200. We know our red line is the 200 and our green line is our 50. So a death cross. This is what happened back right around March, the late March 2018. We had this death cross. The death cross and golden cross, which is the opposite of a death cross, is a very, very, very important indication in a chart. Okay, possibly one of the most important, if not the most important, indicators of a market. When we had this breakdown here, when we had this death cross here, we entered, this is the official start of a bear market. Okay, when the green line crosses below the red line and our price action stays below the red line, then we are in a bear market. Okay, so we touched on, I think 3 videos ago, how a lazy river approach is, if you just wanted to trade the crosses, and we'll touch on that a little bit, that'd be a very easy, very safe way to trade an asset. Okay, you're not going to catch the top, you're not going to catch the exact bottom, but it's a very good, safe way of trading. Okay, now the important thing to remember on a death cross is when you have a cross, you have to stay below this red line. Okay, if price action stays below it, then that's kind of somewhat confirming that you are in a bear market. Does that make sense? So we had a death cross here around the late part of March, and we have been respecting that this entire year. So over a year now we have been in a bear market. Now what's interesting is you can see right here, okay, this green line is now curling up and is coming up to this red line. Now if we cross above this red line, that's what's called a golden cross. Okay, so you have a bear cross here, or I'm sorry, a death cross here, and a golden cross if we continue to rise higher and the green goes above the red. Does that make sense? So there are 3 phases in this this cycle. Okay, first phase, death cross. Our green crosses below the red, and we confirm that with price action staying below the red. Okay, that's step number 1, death cross. Check. We rise up and we confirm it with price action staying below this area. So that's confirming step 1. That's confirming the first phase. We ride this out. We had a capitulation down. Step 2, phase 2, is somewhat of a sideways movement, which we had sideways movement here. This is maybe an accumulation phase. This is an area where people are buying for long-term holding. So this is phase number 2. Phase number 3 is golden cross, okay, and that's when our green comes above our red. And much like what we talked about here is, I'll tell you what we'll do. Let's go back to the last death cross and golden cross. Maybe that'll make it a little bit easier for us to see this. Okay, so this right here was the 2014 to 2015 death cross into golden cross. Okay, so we had a death cross here, right? We came down, we crossed, we confirmed we're staying below this red line here. So we had death cross check, confirmed it, we're staying below it. We confirmed step number one, we came down here and we stayed below this area here. This is phase two, we're kind of sideways movement. We came up here. Now this one's a little funky because we actually technically had two death crosses, or a golden cross, then another death cross, and then another golden cross. So we came up here, we golden crossed here. That's where the green went above the red. We did have price action above our red, which is kind of a confirmation of a golden cross. Then we came back down and we crossed back below, but we're kind of still above. We're still in our golden cross, right? We crossed right below, but just briefly, just for, very, very, if let's say if you had exited your position right here because you're seeing a death cross, and then you can see where we golden crossed, you'd be about in the same area. I mean, back then you're only talking about $30 difference. Okay, so it's really not that big of a difference in this death cross into this next golden cross. But you can see how close in time. I mean, you're talking about a few weeks difference here. So then you have a golden cross here. This was our true golden cross, and you can see what happened with price. Now, let's see what happened here is price crossed at $248 or thereabouts, right? Technically, I guess your price would be around the $288. That's where the candles were when this crossed. So $288. You can see what happened with this. If you look, price never crossed below the 200. We had a wick through just briefly, but those are just wicks. But if you're doing the lazy river approach, buy in the golden cross and just wait until we have another death cross, right? So we went up, we rode this golden cross all the way up until we had a death cross here at about $9,400, okay? So if we had just done that one simple thing, this very simple lazy river approach, that would have been a 3,000% gain in about 3 years, okay? 2.5 years, something like that. So that's a very, very significant time, or a very significant gain for buying one time and selling one time. You make two trades. You buy and you sell. And that was it. So that's astonishingly amazing rate of return for just two trades. Enter, exit. So instead of getting so zoomed in on these little trades, these little smaller swing trades, that's pretty amazing. So if we have another golden cross coming up, and we very well could in the next few weeks, maybe a month or so, that would be a very good time to get in on the lazy river approach. Okay? I'm all about making things easier. Let's not overcomplicate things. Let's not make things harder than they need to be. So now if we go back to, so this was the 2014-2015 bear market. We had another one back here. This one was shorter. This is back in 2011 to 2012. This cross lasted about 138 days. You can see that we crossed here. Price was about look at that, $8. Isn't that crazy? If you could go back in time, isn't that crazy? $8 for a Bitcoin. Man, I would like to have about $10,000 back then and dump it all on Bitcoin. I mean, think about that. I wouldn't even be looking at charts right now, right? But anyway, we had a bear cross or death cross here, took us into a bear market. We had a small sideways movement. Our price action stayed below our 200, so check, check, check. Then we came up and we golden crossed here. Now here's a really good example actually. So we golden crossed here. Price action was below the red, right? So this technically is not confirming the golden cross yet. You want price action to stay on top of the red line to confirm your golden cross. So technically, if I was trading this back then, I would have seen this golden cross, but it's not confirmed yet. It's not confirmed. It's still not confirmed. Okay, now we're starting to use this red as support. Now it's confirming what happened on your golden cross. I hope I'm explaining this okay. Let me know in the comments if I explain things weird. Sometimes it makes sense in my mind, but I'm kind of a weird dude. So if it doesn't make sense to you, please by all means just ask away, ask some questions, and I'll see if I can explain it better. So what I'm trying to say is you want to confirm what you're seeing as far as your indicators. Okay, so let's look at this one. If you had done exactly the lazy river approach and done exactly that, we had looks like we had a death cross right here. So let's see what would have happened if you would have bought this right here and you would have sold at the next death cross. Look at that, guys. 10,000% in 791 days. You know, a little over 2 years. 10,000% gain. That's insane. You try to achieve that with any stock or, you know, anything. That is, it's unheard of. Okay? So what I'm saying is this could be very, very powerful to a very powerful yet so simple way of trading. Okay? So what I want to show you something that's very interesting. So we are looking at Bitcoin. This is the BLX chart. Let's just pop over to, now that you guys fully understand what the death cross and golden cross is, we are going to specifically look at Bitcoin on the Coinbase chart. You can see it's very similar to what we were looking at. You know, our 50 lines coming up to our 200, and it's getting pretty close. You know, if we kind of project this out a little bit, let's see where this could go. Let's say this goes up to about, you know, maybe here-ish, and this continues out to maybe here-ish, right? So we're looking at the end of April, so a few weeks away from a potential golden cross. Now, the only thing we very well could, our price actually could fall back down, and then, you know, that kind of skews our bottom line here, which would curl around. So it all depends. We're speculating here, right? So that's what's interesting. It looks like possibly a couple of weeks away from a potential golden cross. Okay, now don't get me wrong. I want you guys to really pay attention to this. When we have this golden cross, we are still going to have a lot of fear in this market. Okay, even though markets may show, okay, we are in a golden cross, which you can see from history when we go to the BLX chart, how many golden crosses have we had in this entire market? Only a few, right? We had one. Let's actually count them real quick. I've not done this yet, so I'd be kind of curious myself. So we had one. There's one. I mean, technically, that's not me. You can't count this one. I mean, technically this did golden cross right here, but again, we did not confirm it because our price action was not using this red line as support. So we're not going to count this one as a confirmation, a confirmed golden cross, right? So we're still at 1. So let's go back. We had 2. This is our second one. Where's our next one? That's it. We've had 2, right? 2 golden crosses since this market started, at least on the BLX chart. And I don't know if this data is just not loading correctly. Let's see if the Bitstamp chart shows anything differently. This is the first time I've looked at this particular analysis. So bear with me just 1 second here. And it looks like probably 2, maybe 3 golden crosses in the entire charts. 2 or 3. That's it. Okay. So what I'm saying is when this does cross, this is very, very, very significant. Possibly the most foreseeing indicator that you'll have on any chart on anything. Now keep in mind it's daily. Make sure you use daily, if not maybe even weekly. Just out of curiosity, what happens if we go to weekly? See, weekly we're still in a golden cross. So, but anyway, daily's where you want to be. So let's go to daily. Let's stay on daily. Now here's something that's interesting. Okay, everyone knows right now kind of the state and the fear, so to speak, of cryptos right now. Here's something I want to show you. Let's hop over to Litecoin. This is Coinbase chart. Look at this, guys. We had a golden cross in Litecoin on the 15th of March. So about a month ago we had a golden cross. Ethereum. We are getting so close on a golden cross on Ethereum. Okay? So these are things that are popping up right now that not a ton of people are watching. So let's look at Ethereum. The last Ethereum golden cross that we had back on February of 17. The last golden cross, if you had just traded the crosses only, 5,000% in 416 days. 5,600% in a little over a year. That's mind-boggling, right? It's unbelievable. So what I guess the moral to this story is do not discount these golden crosses. Okay, let's pull up some other assets and let's see here. Let's pull up BNB. Let's see how BNB. Now BNB is kind of a newer coin, so I've not looked at BNB yet. So you can see we had a death cross back in September, golden cross in January. We're still in a golden cross. We're currently in a golden cross. Let's pull up ADA, one of my favorites on the alt market. ADA, we are currently in a golden cross right here, right? So what I'm saying is, guys, be very conscious, be very cognizant. I know I am. I'm watching this, and I am loading up my secondary bag with coins that are golden crossing right now. Okay, yes, I did not catch the bottom. That's never my intention with my other bag, okay? But when you see a confirmation of a golden cross, that should catch your attention more than anything right now. My secondary bag, yeah, I'll play these little levels and trade and all that. But my secondary bag, that's the one I load up for the long haul. Now keep in mind, pay very close attention to this too. This golden cross, this 50 and 200, this is a lagging indicator, meaning this is not a fast indicator. We showed this on the last market. Let's see here. Let's go. This is an indicator if you want to play the lazy river approach and are in an asset for years. This is not something you buy at a golden cross and you sell a few weeks later. This is not for that. Okay, let me make that extremely clear. This is a long-term indicator. Long-term, maybe possibly years, probably years. So the last time that this happened, I can't remember exactly how long it was, 880 days. Okay, 880. So when you buy on a golden cross, you're basically telling yourself you're not going to sell this for years. Okay, it's basically one of those, you buy it and you forget it. Put it in cold storage. Do not leave it on an exchange. Ship it over to cold storage and forget you have it. Okay, and then once things start getting up here, and then you guys remember, that's when it gets there's a couple different phases of the upside. Okay, you'll get to a point where you'll start hearing some hype. You'll see some, your family members will start talking about it at Thanksgiving. You'll be seeing and hearing things on news and commercials and YouTube and all this stuff, and then that's when you know, okay, now it's time to start watching. If you start hearing the mainstream media starting to talk about this, now it's time to start thinking about, okay, let's start thinking about an exit strategy. But the whole time you're watching this indicator, okay? And we can talk about that maybe in another episode, to where an exit strategy. But if you want to play things simple, just golden cross to death cross. That's easy. That's simple enough, okay? So anyway, this video has gone on quite longer than I had anticipated, as per my usual, right? I know I'm kind of long-winded and I get gabby sometimes, and I apologize about that. So if you guys would leave me a couple of comments, let me know what you guys think about the lazy river approach. Is this something you guys think is worthwhile? Do you guys think that this this approach is mainly geared toward people that aren't super savvy with day trading, with swing trading, whatever the case may be? This would be an easy way to trade this market with very little effort. So let me know what your guys' thoughts are. So, and then just out of curiosity, leave in the comments below, where is everybody from? You know, you don't have to tell me your exact town, but just for you guys, I am in the United States, and I am in Indianapolis, Indiana, the home of the Indy 500, which is coming up here in about a month. So if you guys drop a comment below, where is everybody from? I'm very curious to see where my audience is from. So if you can leave that below, I would appreciate it. Again, hit the thumbs up, hit the subscribe button, and hit that bell button, and I will see you in the next video. And until then, guys, have fun, stay safe, and happy trading, everyone.